Welcome to Armand Academy. Like and subscribe for more content and drop your doubts in the comments. Share with your friends and classmates. For private tuition in these subjects across all boards and universities, contact me here or the link in the description. Let's get started. Bittu and Chintu were partners in a firm, sharing profits and losses in the ratio 4:3. Their balance sheet on 31st March 2024 was given to us. And on 1st of April 2024, Diya was admitted for 1/7 share. The new profit will be on the following terms: 3:3:1. Fixed assets were found to be overvalued. Okay, fixed assets, I will make a dot. Creditor was paid 4,20,000 full settlement. Okay, so another dot over there. Tia brought in proportionate capital and 5,60,000 as her share of goodwill premium by check. Okay, this is a very short and sweet sum. Okay, I have already marked the adjustment, so I'm just going to go line by line. These guys have asked us to make a revaluation account and partners capital account. Here is the revaluation account. Okay, in the books, in the books of, okay, and if I remember, it is Bittu and Chintu. And this is our revaluation account. And remember, debit and credit. Similarly, we have partners capital account, partners capital account or accounts, because it's three of them. Okay, and I'm going to go ahead and fill in the names: Bittu, Chintu, and Diya. Okay, one more time: Bittu, Bittu, Chintu, and Diya. Okay, back to the question. Capitals are 8 lakh and 6 lakhs immediately in the partner's capital account on the credit side, because liabilities by default have a credit balance. Okay, by balance brought down. Okay, remember, assets have debit balance, liabilities have credit balance. We never write this. Okay, this is just for your understanding. Okay, so capitals have a credit balance, so obviously the balance will come on the credit side. So 8 lakhs and 6 lakhs. Okay, 8 lakhs, 8 lakhs, and 6 lakhs. Next, we go back here and we have a general reserve of 2,10,000. The old ratio is 4:3. Okay, so I will take 2,10,000. Okay, I will take 2,10,000 and multiply it into 4 by 7. 4 plus 3, okay, gives me 7. So 4 by 7. And again, I can take this number 2,10,000 and multiply it into 3 by 7. Okay, and whatever, 7 ones are 7 threes are. So 30,000 into 4 is going to give me 1,20,000. And similarly, 7 ones are 7 threes are. It's going to give me 90. And if I add 1,20,000 and 90, I'll get 2,10,000. Okay, so by general reserve. Okay, why? Because remember, reserves are accumulated profits over a period of time, many years. Now that we're getting a new partner, we have to give this reserve to the old partners because it belongs only to them. Right? So it's going to be by general reserve. The journal entry, remember, reserve has a credit balance. To make it zero, you will debit. Therefore, it's going to be general reserve account debit to the partner's capital account. Which partners? The old partners. So to Bittu's capital account and to Chintu's capital account. 1,20,000 and 90 immediately here by general reserve, by general reserve. 1,20,000, 1,20,000 and 90,000. All right, going back. Creditors, we may as well finish off the entry now. Okay, so we have creditors of 4,90,000, and they're telling us they were paid 4,20,000 in full settlement. Great. The journal entry in such a situation, remember, creditors have a credit balance of 4 lakh 90 to make it zero, we will debit. So it's basically creditors, debit 4 lakh 90,000. Okay, we're giving them money and yeah, they're giving us a discount. Then we are giving them money, so to bank account or cash account, right? So that would have been 4 lakh 20,000, 4 lakh 20,000. I'm just squeezing it in. And the balancing figures are profit. Okay. And since this is admission, we will credit the revaluation account. Okay. Credit all incomes and gains. And the difference is 70,000. Okay. I mean, I'm just doing this journal entry for your understanding. What you need to keep in mind is that we are settling it at 4 lakh 20. How much we have to pay? 4 lakh 90. We are getting a discount of 70. Is that good for you? If it is good for you, put it on the credit side. If it is bad for you, if it is a loss or an expense, put it on the debit side. Basic nominal account golden rule. Debit all expenses and losses, credit all incomes and gains. So I will go to the revaluation account, and on the credit side, I will write by creditors, by creditors, and we will put 70,000. Okay. And with that, I'm done with everything here. On the liability side, on the asset side, they're telling us is to be revalued. Sorry, it is overvalued by 1 lakh 40. That means it has to be reduced from 15 lakh 40 to 14 lakhs. I have to subtract 1 lakh 40. Now, if I'm reducing the value of my assets, that's bad for me. Okay, it's a loss. Okay, so I will go to the debit side and write, okay, two fixed assets, and for the same 1 lakh 40 only. All right, if we were making a balance sheet, then we would have to show that subtraction. They've not asked us to do it, so simply we do this. Okay, so we're done with fixed assets. We don't have any journal entry for stock. I don't see any journal entry for debtors or bank. Neither do we have to maintain these accounts because they're not asked. We don't have to do a balance sheet either. So, the new profit sharing ratio is given to us as this. Okay, that will help us deal with the 5,60,000 goodwill, as well as deciding how much capital the new partner is to bring. Okay, so we are done with this adjustment. We are done with this adjustment. Let us have a look at this. 5,60,000 is coming in. Okay, we debit what comes in. Okay, and what is coming in is money by check, that too. So bank account debit 5,60,000, but we don't credit the partner, incoming partner, for this amount. This is premium for goodwill. She's joining a business that's already established, that is making money because of the efforts of the old partners. She's compensating those old partners because she's going to take a share in the future profits of the firm. Okay, so we will credit premium for goodwill with 5,60,000. Okay, and we break up this premium for goodwill among the old partners in what is called the sacrifice ratio. Okay, and that we have to calculate. Okay, we know that the old ratio is 4 to 3, and the new ratio is 3 to 3 to 7. Okay, so we have to do a little bit of math. Okay, so we have got 4 by 7. The old ratio is 4 by 7 and 3 by 7. Remember, sacrifice ratio is equal to old ratio minus new ratio. So sacrifice ratio for A, okay, and let's not say A and B, Bittu and Chintu. So sacrifice ratio for Bittu, sacrifice ratio for Chintu. Okay, old ratio 4 by 7, 3 by 7. New ratio 3 by 7, 3 by 7. So accordingly, let me do minus 3 by 7 minus 3 by 7. Remember, this is Bittu and this is Chintu. Now notice Chintu 3 by 7 minus 3 by 7, 0. So there's no sacrifice with me. Okay, and as far as Bittu is concerned, it is 1 by 7. Okay, it is 1 by 7, and it is no coincidence that the incoming partners share in the future is also 1 by 7. So basically, Bittu is giving everything to Diya. And that means that 5,60,000 also is Bittu's entire. Right, so what is happening over here? The premium for goodwill is going to be debited by 5,60,000, and we will credit the sacrificing partners. Okay, the sacrificing partners in the sacrificing ratio. And we only have one partner who's sacrificing, so that one partner gets everything. Okay, Bittu will get everything. So immediately we go to the partner's capital account and we write buy premium for goodwill, premium for goodwill, and we will put down that full 5 lakh 60 under Bittu's column. Then what else do we need to do? Okay, going back here, any other adjustment? Okay, let us see very carefully. We have dealt with goodwill. Okay, we have factored in the new profit sharing ratio for the goodwill. Now, the only thing left for us to do is to decide how much money must Diya bring. Okay, and for that, we need to find out the balancing figure of the revaluation account first. Okay, because that has to be transferred to the old partners in the old ratio. Whichever side is heavier, we write on both the sides. So I think the debit side is heavier. I will write 1,40,000 here and there. 1,40,000 I've written on both the sides, and now I subtract the lighter side. So 1,40,000 minus 70,000 is 70,000. What is the 70,000? It's a loss. Okay, so it will be by loss transferred to partners capital, and we've got two partners, partners capital, and we've got two partners. Okay, who are the partners? Bittu and Chintu in the ratio 4:3. So 4:3, I think, is going to give me 40,000 and 30,000. Where did I get this 4:3 from? It is given to us in the starting of the question, 4:3. Okay, so 40,000, 30,000 is on the credit side over here. That means it is going to come on the debit side over here. All right, it will be revaluation, to revaluation account. Okay, let me try squeezing it in. Account 40,000 and 30,000. Okay, and now what we are going to do is we're going to find out the balancing figure for the old partners because there's nothing else to be done with them. To balance carried down. Okay, the opening balance is balance brought down, BD. Okay, don't be confused. All right, B is brought down, CD is carried down. So as far as Bittu is concerned, okay, and I want to leave a little bit of space, okay, because we have one more entry. Okay, Diya has to bring in her money. Okay, let's say she brings it by check. Okay, goodwill is coming by check. Capital also should come by check. By bank account. Some number has to come here. Okay, the question is how much. That's why we're doing the calculation. Anyway, so whichever side is heavier, we write on both the sides because these are partners running a normal partnership business and we are looking at the capital account. Mostly the capital account will have a credit balance because I mean it's a functioning business and they put in money. Anyway, so 8 lakhs plus 1 lakh 20 is 9 lakh 20 plus 5 lakhs is 14 lakh 20, 14 lakh 80 is going to be my total year. Okay, and remember, whichever side is heavier, we write on both the sides. 14 lakh 80 and again 14 lakh 80. And then we subtract 40, so we get 14 lakh 40. Then 6 lakh and 90. Okay, so we get 6 lakh 90. And again on this side, 6 lakh 90. And then we subtract, okay, 30. So I'm going to end up with 6 lakh 60. Now, I have to take the total of both of these partners' capital, closing capital. Okay, and I'm guessing it's going to be 21 lakhs. You can do the math. All right, what we're going to end up with is 21 lakhs. 14 lakhs plus 6 lakh 60,000 is 21 lakh. Now, remember, Diya is coming in for 1/7 share. Diya is coming in for 1/7 share. Now, that means the other partners, Bittu plus Chintu, their total share is 6 by 7. If Diya is getting 1 by 7, what is left is 6 by 7. Okay, that we can calculate upstairs. 3 by 7 plus 3 by 7 gives us 6 by 7. Anyway, uh, we know that the 6 by 7 corresponds to how much have we decided? We are adding both of these numbers and we are getting 21 lakhs. So I'm going to say that 6 by 7 corresponds to 21 lakhs. 1 by 7, 1 by 7 corresponds to x. Okay, and we use the unitary method to calculate. Okay. You get formulae. I mean, you can look at your textbook. A lot of textbooks give you a formula, but this is common sense. Simply use the unitary method. So I'm going to do 1 by 7 into 21 lakhs divided by 6 by 7. Okay, which is as good as saying 1 by 7. Okay, 1 by 7 into 21 lakhs into 21 lakhs. And if I want to convert this division into multiplication, I have to take reciprocal. So into 7 by 6. And now life becomes easy because I can do 7 and 7 cut. And yeah, okay, we have to think a little bit. Maybe 3 twos are, 3 sevens are, 2 ones are, and you're going to end up with like 3,50,000. Do the math, I'm sure you'll get it. Okay, so you're going to have a buy bank account entry for 3,50,000 over here. Okay, and now Dia has paid her capital and has become a partner in the business. So 3,50,000 and 3,50,000. Okay, and I mean I've not followed the right sequence. I'm going to do this one more time. Right, I have 3,50,000, which is the total over here, which I immediately write on both the sides. So one side, other side, and I subtract. And I subtract to get this 3,50,000. Okay, short and sweet sum. Anybody has any doubts, feel free to ask. Okay, and as always, please like, share, and subscribe. Thank you.